Hello, this is Dean Thomas with eReal Estate Corporation and Value Mortgage. This is episode 2 of our 12 episode series for real estate success in every market. In episode 1, we covered the basic principles of how to lay your day out, plan your week out, plan your month out, set your goals. This episode 2 is going to be regarding financing. So I've been in real estate since 1979, that's 42 years. And I've experienced interest rates at 9%, 10%, 13%, 7%. They're currently at 2.5% and 3%. They're sure to go back up again sometime in the near future. But the key is not so much at any given time what the rate is. It's what are the financial options. What options do I have for my client? What options, if I know what all of my options are, I have the ability to sell multiples amount of transactions. My career, I just mentioned, has been over 42 years. I think we have averaged between 30 and 50, sometimes 75 transactions a year in our business, using our business model. So I'm going to go through about financing for a minute. Hopefully we don't jump around too much. It's only going to be about 5 minutes. So here's how it rolls out. You either have a client that has $10,000 in the bank, 20, 30 in the bank, 70, 100,000 in the bank, 500,000, a million. Some clients have 10 million in the bank. Now, each one of those clients need a different level of expertise, but they all need expertise in financing. And no matter what decade it is, it's the same situation. What are my financial options, or what are the best ones for me? So let's dig into this a little bit. If I meet you and you tell me you have $0 to $20,000 down, I'm going to look at you and I'm going to say, okay, I'm going to analyze what your financial options are, and I'm going to deliver them to you. So let's just say you're a couple that has $20,000 saved up. You want to buy in a neighborhood. You make $130,000 a year, and you ask me, what can I buy? And you have $20,000 in the bank. I'm going to tell them that there are first-time hire programs that offer 100% financing. I'm going to let you know there's FHA financing available that offers 3.5% down. There's also FHA programs that allow you to even borrow the down payment, so you still end up with 100% financing. Now, the interest rate's a little bit higher, so you can come in with 100% financing, you can come in with 3.5% down. So let's take it a step further with the couple that has the $20,000. 3.5% down is the down payment. That means if I have a $600,000 purchase price, 3.5% of 600 is $20,000. The seller can pay the closing cost. So I can quickly analyze that with that buyer that has $20,000, they can borrow up to a $600,000 house. Now, if they want to get the secondary financing behind it and they want to go up to $700,000, there's FHA and other CalHFA programs that will loan you that money as well. So there's the quick one right there. Anybody that has $0 to $20,000 down, we can sell them a $600,000 or $700,000 house, close the escrow in 30 days. There's a real estate transaction. Now you have the buyer that's got $30,000 to $100,000 down, $20,000 to $100,000 down. What do we do with this buyer? Well, it's going to be based on their credit and income, of course. But this buyer, I would analyze it like this. Okay, if it's a doctor and the doctor's making $300,000 a year, and he's got $100,000 down. Certain lenders have lending programs for doctors that allow them to put 5% down up to $2 million. If one is because of their income, two is because doctors have a very low default level, right? Now, if it was somebody that was self-employed and they had $100,000 and their income was $150,000 a year, what I would do is reverse that, and I would say, okay, that means they make about $13,000 a month. 40% of 13,000 equals, I'm going to say in my head, 40% of 15,000 is about 5,000 a month. So they qualify for approximately, now I'm freestyling this, right? So they qualify for approximately $5,000 a month mortgage. 15,000, no, that is incorrect. They qualify for about $6,500 a month mortgage. So again, this buyer has $100,000. They make $150,000 a year. They qualify for about a $6,500 mortgage. So then you can calculate that out, what kind of house does that equal, where the interest rates are today. That would equal about a mortgage of 1.5 million, right? So you have the person with 10% down, they have reasonable credit. If they can also, now if you put 10% down, you're gonna have PMI insurance. And there's lenders that have options where they will not have PMI insurance. So you can do secondary financing behind that and lower their down payment. The next part of it is we have our standard conventional loans. Now, if you're a buyer that has 20% down, my recommendation to all my clients, I've been doing this for years, and our agents implement this principle as well. If you have 20 or 25% down and you're purchasing a property, you should get pre-approved at 4 different lenders. My suggestions are always Citibank, Chase, B of A, Wells Fargo, and your local mortgage company. And I like to put the local mortgage company in because I've owned a mortgage company since 1996. It's called Value Mortgage, or I've been a partner with my wife. And at our mortgage company, we offer lots of financing. Sometimes lenders don't offer the same types of financing as mortgage companies. So you certainly want a good relationship with somebody at all 4 major lenders and a good mortgage broker. A mortgage broker also can help you get other types of financing like private funds and all this that we'll talk about in a minute. So with 20-25% down, I sell you a property, we're gonna get quotes from 4 lenders, I'm gonna deliver the quotes to you, you're gonna tell me, as I'm working for you, which lending program you want, and then we go ahead and lock in your rate. So that way we get the buyer the best loan, and then when you take those extra steps for your clients, and you do that every time you sell them a property, they appreciate the value you bring because they know you're trying to save them money in every aspect of the transaction. Okay, so now let's talk about investment capital for a minute. I'm going to give you an example right now, and then we're going to end this in about 2 minutes. So we purchased an 8-unit townhome project over here in South Torrance. Our office is in Redondo Beach. These are 8 townhomes. We bought them in bulk for $5,750,000. That's about $718,000 per unit, $720 per unit. The flip and resale value of these are between $950,000 and $1 million a piece. So we bought them for $5,750,000. We're going to put $200,000 into it. That's $5,950,000. If they're worth $1 million a piece and there's 8 of them, that's $8 million. So there's somewhere between $2.5 and $3 million of profit on this project. The seller wants a transaction that's going to close with no problem. So us as the buyer, my client B&J Capital, I should say my client B&J Capital, I'm a partner, an investing partner in that. B&J Capital, I arranged financing for with 20% down. So we have a loan with 20% down that's going to be paid off in the next 9 months. The rate is, in today's market, it may sound high, but it's 7.5% interest. But it's 20% down, and they're going to allow B&J Capital to sell each unit and make progressive payments and give releases on each townhome as they're sold. So my client B&J Capital is going to sell a property. I'm making a 2% commission, $5.7 million transaction. Then I'm going to sell the 8 townhomes for B&J Capital. My commission is going to be 2.5% on each one of those, times 8, times $1 million. So if you do that math, there's like $250,000, $300,000 in commissions there. So when you know where to get the financing at, you can assist investors. And looking at investors for one more moment, in California, the average homeowner sells their property once every 4.5 years. So if you're only selling residential property, then your client is going to come back to you once on average every 5 years. If you deal with investors, they like to buy and sell and buy and sell and buy and sell and buy and sell and buy and sell in any market as long as they're making money. Now, if you can align the financing for your investors, because everybody likes to earn an income and make money in real estate, if you can assist your investors by facilitating them financing, multiple transactions for you. So I'm available all the time. My number is 310-874-1010. You can send me an email, hit the link below. I appreciate you watching this episode of Financing and Success in Any Real Estate Market. Our next episode is going to be about digital farming. Farming the way it used to be 30 years ago is different than farming the way it is today. Look forward to seeing you soon. Have a good day.